October is over. We're heading into Moonvember here this month. Let's take a look at Bitcoin returns last month. Let's take a little bit of a look at what they may be in November here, or at least what they've been in the past. We're going to look at the money market funds that came out yesterday. We're also going to start things off with the economic calendar. So let's go ahead and look at the economic calendar real quick. Yesterday we got PCE that came out actually pretty good. PCE year over year is 2.1, core is 2.7, which ticked up from 2.6. So that's not ideal. To see the core PCE going up, that is one that the Fed watches. Also, initial jobless claims are lower than expected and lower than last time at 216,000 compared to 228 expected and 227 last time around. So that's also not those two numbers. One, the inflation coming in higher and the unemployment coming in lower. Not particularly good for rate cuts if that's what we're looking for. So today we got the employment report. What is this? Is that jobs added? Why is that? That's got to be a typo. 12,000 when 110,000 was expected. That's got to be a typo. I'd have to look into that. U.S. unemployment rate coming in at 4.1, so we're above full employment. Full employment is basically 5%. We're above that, and we've been above that for a long, long time here. Okay. All right, that's what's going on. Okay, so the hurricanes and the Boeing strike. They're skewing data there, so that's what's going on with that. All right, nothing to be too concerned about. Let's take a look at the money market funds. Okay, so you can see here, lowered by $3 billion. So came in a little lower this time around, well, a little less than $3 billion. You can see it's 0.98 there. And who was that from? It wasn't from retail. Retail is actually still stacking. Okay, retail is still stacking, meaning retail hasn't got the memo that institutions are putting their money back to work again. So institutions lowered by a few $1 billion while retail increased their positions. So we're going to see that disparity for a little while. Institution will lead the way and then retail will bring up the rear. When this starts lowering for retail in a significant way, that's when we're probably going to get our very last jump up, and that's when institutions will use us as exit liquidity. So that's why I'm watching this pretty closely. Okay, Bitcoin returns. Let's take a look at the Bitcoin returns here for October. Came in at 10.76% for October, which is a little weaker than we expected, especially for a halving year. The previous halving years was 2016. That was 14.7%, 2020, 27.7%. Huge moves by comparison. I mean, almost 40% bigger at the lowest end there for previous halving years. So that sucked. But I mean, it wasn't that bad, but that could be skewed due to February and March being so strong this year, kind of maybe eating some of our lunch here for October and maybe even for November. November, the average move is 42%. That is heavily skewed from this very first year down here at 2013, where it was 449%. So this is actually probably something closer to like 30%, 25, 30%. You can see the median is only 7% for November, but November does tend to take off in halving years. You can see that in 2016. Well, 2016 was only 5%. 2016 only 5%. 2017 50%. 2020 it was 42%. Let's see, 2015 year before 19%. Yeah. So November, it's either going to be a home run or a dud, basically for Moonvember, and that's kind of how it goes. We're either going to absolutely take off, or we're going to be pretty flat. So we'll take a look at that. I mean, there are some years where it was really bad too, but those were winter years. Well, not 2021. That wasn't a winter year, but 22 was a winter year. 2018 was a winter year. Yeah. Anyways, moving on to MicroStrategy. So we're going to talk about MicroStrategy a little bit here today. So this thing came down off of its highs. And how much did it come off of its highs? It actually hit a pretty significant low yesterday during earnings. And earnings were bad because they're always bad for MicroStrategy. We've gone down as much as 11%. That's a solid pullback. We've done that before, like right here. How much was this pullback? It was 18%. So we could move, if we did 18%, where would that take us? Not there. Back to about 219, which we did hit in after hours yesterday. So we kind of already bottomed out in that respect. Let me do a real quick fib retracement. So first of all, I'm going to go move this to 2 hours. Okay, we're going to go 2 hours. And then I'm going to turn on extended trading. Okay, there we go. You can see that big wick down here, that wicked stop hunt there, basically. So we're going to go ahead and we're going to do a fib retrace from the bottom of this arm here. So down here, up to the top over here. Okay, and we're going to see what that looks like. Did we make it to institutional buy zone? Ah. Okay, this is in my way. Not quite, but we got to the 618. 618 is not bad, actually. Okay, we went a little lower than the 618. Actually, we went into the 786 here with that dip off of earnings. So actually, we're actually primed to start going back up again. That's not bad. We are getting a bit of a falling wedge sort of looking pattern here, and it is basing out. So if it is to curl up and get above 248, then we're coming back to the top of the move in the 270s. If it falls anywhere under, 238, 33 there on the fib, any lower than that, we're going to start testing the 5, which is at 228, and the 618, which is at 218, and maybe even 204, all the way down at the 786. That is possible. So we could see that as well. So watch those levels. We lose the 382, which is 238.33. We could fall down to the 5 or the 618 or the 786, a level at a time. If we break 248 to the upside, we're likely to test 259 and then 270 again for MicroStrategy. Now, of course, that all is going to hinge on Bitcoin. We are not following Bitcoin today. We're actually doing the exact opposite of Bitcoin today with MicroStrategy. Bitcoin is up 1.7%, 1.17%, excuse me, and MicroStrategy is down 1.47%. Today, the miners are actually doing pretty well. BitDigital seems to be leading the way, correct? Yep, BitDigital is leading the way, at least on my list here, with almost 5%. Bitfarms up 1.82%, still hanging out in the 190s right now for them. Mar up 1%, Riot up 3%, CleanSpark up 3%, Hut up 4%. What's CoreZ doing? CoreZ is one of the few that is down today, down 1.43% there. So the other thing to note of MicroStrategy, why it fell so hard in after hours the other day, let me get rid of this, is this earnings. MicroStrategy always misses earnings. Okay, I say always, and now I'm going to look back and see that there was like one where they beat it. Yeah, there was one where they beat it, but they still missed revenue, so they didn't beat. That's not even a good one. Okay, they always miss earnings in some way. Okay, they always do. If you are holding over earnings, you're going to have a red day. That's basically just how MicroStrategy works. The reason for that is their underlying company doesn't make any money. None at all. I mean, look at this. They missed EPS by 1,298%. That's worse than some Bitcoin miners, okay? They missed revenue by 4.43%. Their software business sucks. They do not make money. The only good thing about this company is Bitcoin. That's why their earnings are always complete trash. Always. Doesn't mean they won't go back up. It doesn't mean that they're not going to reach, $500, $1,000 in the future. Doesn't mean any of that because they have Bitcoin. Bitcoin is their secret weapon. It is their cheat code. It is working exceptionally well for them. So I wouldn't worry too much overall as long as Bitcoin's doing well. MicroStrategy will do well, but earnings reports are going to consistently be a problem for MicroStrategy, at least for that day, maybe for that week, because they are going to come in badly unless something in the underlying business of MicroStrategy changes on a fundamental level. They are going to miss their earnings basically every time because they just don't make money. That's all. They've got the infinite money glitch through Bitcoin, but as a business outside of Bitcoin, they've got nothing really right now, and I don't even know if they're developing anything. So that is that for MicroStrategy. I have not been running my wheel on MicroStrategy lately. I do not have $24,000 to run a wheel on MicroStrategy right now, so I have actually switched over to a different stock for the time being. And I'll tell you about that in the next income machine video, which is going to be coming up very soon. It's going to be coming up over the weekend here. New income machine. I've got a new ticker there, and that one's going to be real exciting. Don't miss that if you're into income generation. Okay, I was requested Bitfarms for this video yesterday. I got the request for Bitfarms, so we're going to go ahead and take a look at that. So let's bring up Bitfarms. Bitfarms, what do I like? I actually like this move right here. So on the 2 hour, we've got the momentum ribbon here crossing up over the fast, crossing up over the slow. Okay, coming out of oversold territory. We've got average force here building back upwards. I like both of those things. Now that could take us up to the 200 here and where it fails, which would be $2.07. Could take us up to that and fail. That's possible. Okay, That could happen. If it doesn't stop at the 200, we're coming up to 213, where I would expect it to probably stop and give us at least a flag at that point. At this point, what I want to see for Bitfarms, if we go to the daily doesn't look good. Okay, the daily looks bad, so that's not going to be long-lived. Yeah, so this is what I'm looking at. So we go on the 2 hour. I'm looking for a drive up to the 21 or the 200. Okay, then I'm looking for potential weakness on that because the daily chart looks bad. Okay, so if we go, so we can see how the 2 hour looks good, right? We got average force curling, getting smaller to the downside. We've got momentum ribbons crossing up and the fast one pointing up, which will slowly drag up the slow one, which is at the bottom. Okay, but we've got the 200 in the way. We got the top ATR band here all the way up at 216. I wouldn't see us going any higher than 216 right now, and that is because the daily. If we go to the daily, average force is getting weaker. You can see it's coming down. We've got the fast crossing below the slow on the momentum ribbons. Last time that happened was back here on October 1st, and we fell on that day. We fell, let's go from the bottom of it actually. Well, first we went up 4%, and then we fell 12, almost 13%. Okay, so if we did the same thing now, if we came here and we went, up 4%, we're already almost to that point where we've gone up 4%. And then if we fell another 12, that would take us all the way back down to $1.68. That's not good. Do I think we're going to hit that? I don't necessarily think so. I'm looking at this trend line still. I'm still looking at this trend line right here, this yellow one. I'm watching that very, very carefully. If we lose that trend line, we're going to have a bad time. If we come down here and bounce off this trend line, I'm not too upset because that is a higher low, right? If we bounce off this trend line, and that is a higher low from back here on October 10th, okay? Higher low there, and we had a high, higher low, higher high, and then, I don't know about this one here, because if we come down here, that would be a lower low compared to this spot right there on October 25th, which may indicate that we could be looking at some sort of megaphone. I don't know. We'd have to wait and see how that plays out. But all I know right now is that this trend line needs to hold. Okay, this trend line needs to hold. If that does not hold, we're going to have a bad time. And we do need to get back above the 200 and the 21 and the 5, which are all bunched up at 201 and 203. So we need to get above those, and we need to get above those with force, kind of like we did back here, but hold it more than 2 days because that was just disgusting. Look at that blow off top right there. Just a blow off top candle right there, and another one right there. 2 signals of get out of this thing is going to come right back down. Okay. So we're basically right back to where we started a couple of days ago. Not really a big deal. Nothing too crazy right now. We're range bound. We're honestly, Bitfarms is range bound right here between about 230 and let's say about 177, and it has been since it got back down here in August 28th. So since August 28th, we've been range bound there. I mean, you could argue we've been range bound this badly since August 5th, with a few outliers to the up and downside in August during that volatility. So for a couple of months, we've been in this range between 230 and 177. And we really need to see it break out of this range here, out of this box I just drew. We really need to see it break out of that box with force. And then we could see it coming back up to the $3, $4, maybe higher on Bitfarms. But for now, we're stuck. We're just stuck. We're trapped in this little box. We need to see it get out of the little box, and it needs to do it with force. Okay, so that's what we're looking at for Bitfarms right now. I think that's the only miner I'm going to cover this morning. This is going to get real long if I go into some of the others right now. Watch for the weekly closes coming out tomorrow on those if you want an update on all of the Bitcoin miners that we follow here on TradeCave. Let's see, the only other thing I want to talk about today, look at all that. Look at all that beautiful, those beautiful numbers there. Intel up 5%. Look at that. That's nice. AMD still falling. Anyways, that is all I've got for you today. Please like, comment, subscribe, share this video. Check out the TradeCave store, link in the description, as well as the channel bio. Do not sleep on the sticker shop. That link is also in the description and channel bio. And have a profitable day.